Namaste. In this video, we will discuss about Indian Accounting Standard 16 that talks about the accounting treatment of property, plant and equipment. While explaining India 16, we will focus on the objective, scope, definition, recognition criteria that has been explained in this India, measurement requirements, measurement once the PPE has been recognized in the books, derecognition of PPE and disclosure requirements thereof. Objective of this Ind AS is how to account for property, plant and equipment. It tells us what is the PPE, what is the definition of it, how it is to be recognized in books of accounts, and how much will be the carrying cost of PPE, and how the depreciation to be charged in P&L, and how the impairment to be recognized in respect of PPE. Case 16 applies in respect of all property, plant and equipments except where there is any specific requirement of recognition etc. by another accounting standard. For example, in case of assets classified as held for sale, Ind AS 105 will be applied. In respect of biological assets other than beer plants, those are covered under Ind AS 41. Exploration, which is taken care by Ind AS 106, and mineral rights and mineral reserves like oil and gases, etc. However, Ind AS 16 will be applied to PPE used to develop and maintain the above assets like biological assets, exploration and mineral rights, etc. PPE are tangible assets held by an entity for usage in production or providing services or for rental services or to be used in administration purpose. And these assets should be held by an entity for more than one period. Here we need to take care that what is more than one period is not defined in Ind AS 16 and ordinary we should take care as annual period. PPE will be evaluated on cost and cost will comprise purchase price that will include non-refundable taxes, and if there is any rebate on the purchase price it will be reduced from it, and other directly attributable costs like testing charges, freight and forward expenses incurred, professional charges etc. it will be included in cost, and if there is any obligation for dismantling and removing the items and restoring the site, these expenses will be included in the cost. Cost will be equal to the cash price equivalent that we have paid. In case entity has obtained the asset on credit terms. So the difference between the price on credit term and cash price, it will be booked as interest expense. In case asset is acquired in exchange for non-monetary asset, in that case it will be booked at fair value price, and self-constructed asset will be booked on cost. Cost of property, plant and equipment will be classified as an asset if these two conditions are satisfied. First is that it is expected that future economic benefits will be flown to an organization, and the cost of property, plant, equipment can be measured reliably. And these two conditions will be applied for the initial cost of property, plant, equipment as well as the subsequent cost of property, plant and equipment. There may be some cases where property, plant and equipment are not providing directly future economic benefit to the organization, but those are required by law to be installed or to be procured to do the business. That's why it will be classified as PPE, and in case of subsequent major inspection, overhauling, repair, replacement of part will be also classified as PPE if these fulfill the two conditions. PPE will be evaluated on cost and cost will comprise purchase price that will include non-refundable taxes, and if there is any rebate on the purchase price it will be reduced from it, and other directly attributable costs like testing charges, freight and forward expenses incurred, professional charges, etc. It will be included in cost. And if there is any obligation for dismantling and removing the items and restoring the site, these expenses will be included in the cost. Cost will be equal to the cash price equivalent that we have paid. In case entity has obtained the asset on credit terms. So the difference between the price on credit term and cash price, it will be booked as interest expense. In case asset is acquired in exchange for non-monetary asset, in that case it will be booked at fair price, fair value price, and self-constructed asset will be booked on cost. India 16 suggests two models for measurement of PPE after its recognition. First is cost model. In this model, assets will be carried at cost minus accumulated depreciation minus accumulated impairment if any. Second model is revaluation model. In this model, assets will be carried at fair value minus accumulated depreciation minus subsequent accumulated impairment if any. If company decides to revalue it, the entire class of PPE shall be reviewed. And the frequency of revaluation will depend upon the change in the value of the asset. If there are frequent change in the value of assets, revaluation need to be done on annual basis. In absence of frequent change in the value of assets, 3 to 5 years will suffice the purpose. In case after the revaluation, carrying amount of an asset has increased, so that increase shall be recognized in OCI and accumulated in equity under the heading of revaluation surplus. However, any increase shall be recognized in P&L to the extent it reverse a revaluation decrease of the same assets previously recognized in P&L. In reverse case, if the value of asset has decreased as a revaluation exercise, the decrease shall be recognized in P&L. However, decrease shall be recognized in OCI to the extent of any credit balance if available in respect of that reserve. India 16 defined depreciation as systematic allocation of depreciable amount of an asset over its useful life. So if you look at the depreciation definition, it has three elements. One is depreciable amount, that how much will be the depreciable amount. So it means that it will be cost, residual value and asset. Next is useful life, that how long should be the useful life of an asset. So useful life of an asset is defined in terms of the asset's expected utility to the entity, and it's a measure of judgment. So it can be defined based on the number of periods for which asset is available for use, or number of units those are expected to be produced by that asset. And third parameter is systematic basis depreciation should be allocated. So Ind AS 16 does not prescribe any specific method which should be used for depreciation purpose. Rather, it requires the depreciation method used should reflect the pattern in which assets' future economic benefit are expected to be consumed by an entity. So there are variety of depreciation method that can be used. One is SLM method, WDV method, or unit of production. Next topic that we are going to cover is derecognition of PPE. As per Ind AS 16, it can be in two cases. One is on the disposal of asset, and another is if no future economic benefit is expected from usage of that asset. In that case, there may be gain, there may be loss. It will be decided based on the net disposal value minus carrying amount, and gain or loss will be included in P&L but not as in revenue. The last and extensive topic is disclosure requirements. So here detailed disclosure requirements have been given in India like measurement basis, depreciation method, useful life and depreciation rates used, gross carrying amount, reconciliation of carrying amount at beginning and end, increase or decrease as a result from revaluation, impairment losses, depreciation, etc. And you need to go through about the all disclosure requirements given. These are in details, and this is the basic understanding of Ind AS 16 PPE. In case you are interested to know more, learn more, want to see some examples related to PPE or other indices in your syllabus, you are welcome to contact for free classes at your number. Thank you.